Hey guys, welcome back to Valorizo Capital. On today's video, we're gonna go through the market update and also the weekly watch list. For today's video, I'm doing something different. We usually take a look at the daily charts on the markets, but today we're gonna go through the hourly charts, and I actually think that I'm gonna make that change going forward. The reason why is because, as you know, these are basically just weekly updates, and sometimes the patterns that we see on the daily charts take a lot more time to fulfill, right? Sometimes they can take a couple of weeks or even a couple of months. So I decided to go through the hourly charts. That way you can actually see the process that I see on these lower time frames, and probably you're gonna see, and most likely you're gonna see that you're gonna get a lot more of value, because you're going to be able to see the price structure of the price using the hourly charts. And before we jump into the chart, I just want to make a quick explanation about the charts. I use the hourly chart, but the moving averages that you're gonna see on the charts are actually the daily moving averages. So I don't use the 8 exponential and 21 exponential of the hourly, but rather I look at the hourly charts to see the structure of the price, but I use the daily moving averages. So you're gonna see the moving averages that you're gonna see on the chart are gonna be the 8 exponential daily, the 21 exponential daily moving average, and then of course we're gonna see the 50 daily moving average, the 200 daily moving average, and the other one you can either use the 30 daily moving average or the 200 hourly. They're very similar, basically the same moving average. So that's what's gonna happen. You're gonna see, and let's just jump directly into the charts. That way you can see what I'm talking about. Let me just grab my drawing tools. Let's just jump directly into the charts here. So here we have a chart of the UVXY. So what I'm talking about here is that you can see that the price action is from the hourly chart, but the moving averages, you can see that here I have the 50 daily moving average. I have this is going to be the 200 hourly, or you can use the 30 daily moving average. And then of course I have the 21 exponential daily and the 8 exponential daily. I also have the 200 daily. You cannot see it right now because it's really up here, but you can see it, but it's also the daily moving average. Now on the right side of the charts, I have the same indicators as I used to in the daily charts. So I have the TTM squeeze, that's the daily TTM squeeze. So this one is the one on the bottom, and then the one on the top is the trend oscillator, is the same trend oscillator that I use on the daily chart. So I have those same indicators for the daily patterns. You can see that here I have a daily chart, but the pattern that I have on the left is the hourly. So it's not difficult at all. It's just that the price action and the changes in the structure are way easier to see on the hourly chart, especially if you're looking to swing trade just for a couple of days like myself. So let's just jump here into the charts. I'm gonna start. We were using the UVXY as an example, but let me just take a look at the SPY. And the reason that I want to take a look at the SPY is because here now you're going to be able to see what I'm actually looking at. And this is really important, because we were talking about the SPY last week, and we were talking about the SPY in this pullback right here to that 21 exponential moving average. Now the thing is that on Tuesday, because Monday the market was closed, you can see that the price gapped right below this level of support. So when you're looking at the daily charts, it's not that easy to see this break in structure, but when you look at the hourly charts, you can actually see that break in structure pretty easily, and that's why I love this time frame. This is actually my favorite time frame. Most of the times I just look at the hourly charts. I'm actually looking less and less to the daily charts, and that's just a personal preference because of my style of trading. Since I usually tend to buy, for example, a trade of mine was buying the SPY here just a couple of weeks ago, and I basically sold it somewhere around here when we were getting to the supply level. So that's kind of the trading that I enjoy doing, right? Another trade of mine was buying the SPY right here in this 30 daily moving average, or that 200 hourly, and then selling the SPY as soon as we were getting into these levels of resistance. So that's the trading that I enjoy. Now, going back to the charts, what is the expectation for next week? Right now the expectation for next week, you can see right here that we came and we tested that 50 daily moving average. That 50 daily moving average is this purple line that you were seeing here, but it's actually pretty interesting to see that price was pretty rejected at that level, and you can see that pretty clearly in this hourly chart that we have right here. So I actually find that pretty fascinating. So let me just zoom in a little bit so you can look at price a little bit better, and you can see that we got rejected at that 50 daily moving average. So expectation is a continuation to the downside, right? Now, how far are we gonna see that pullback? I do have some levels right here at 390, and if we just zoom out a little bit, you can see that we had this base, and then we had this breakout, and we had a pretty sustained rally in the SPY. But right now you can see that we have a very strong level of support somewhere around 390. So the expectation is, if this 200 daily doesn't hold, then expect some retest of that 390 level. If that level holds, which is my expectation, then we're probably gonna see a base and then a continuation to the upside. But right now, the expectation for this week is just let this sell off, right? You can see that we got rejected at the 50 daily moving average. And let me just zoom in here a little bit. We got rejected at the 50 daily moving average, and there's no reason to buy this, right? We continue to make lower highs and lower lows, so that means that the structure is bearish. So the expectation is just a continuation to the downside. Look for this 390, 391.50, 390 level as a possible level of support. If we happen to reclaim this 402 level, then perhaps we're gonna see some kind of reversal. Otherwise, just let the moving averages catch up. The 8 exponential daily, that 21 exponential daily, just let them catch up. Let's see if we can form some sort of base, and then we're gonna be looking for a reversal. I don't think that we're just gonna continue to sell off like the previous bear market lows, but we have to take it day by day, right? We also have to take into consideration that I have an active sell signal. This signal has been active since this day right here. I make some adjustments to the indicators, and I'm gonna be covering that on some of the videos that I'm doing. If you haven't watched those videos, I make one on the 8 exponential, also one on the 21 exponential. You can see the links you can find the links in the description. But I make some adjustments to the sell signal, and it's actually working pretty amazingly. You can see that we had an active sell signal here. We got rejected as supply, and then we basically changed the structure. So right now the trend oscillator and the squeeze pointing to the downside. I have no reason to buy this market. We just have to wait for better signals. And if you are looking to short this, just be aware that you're probably a little bit late to the party, since we are already at that 50 and that 200 daily moving average. So basically just a waiting mode for me currently. Let's take a look at the QQQ, and you're basically gonna see something pretty similar, right? You can see right now that we also have a sell signal that is active. You can see that we got rejected as supply. This previous level that was support is now acting as resistance. So previous demand now became supply. That's actually something that you can see pretty clearly on the hourly charts. So that's something really amazing. You can see that we tested this level a couple of times. You can see that the 21 acted as resistance, and right now we're testing the 200 daily moving average. I do think that the QQQ is going to test this 50 daily moving average, so I don't see any reason to buy this here. The only reason to buy is if the QQQ actually reclaims this 298 level. So just waiting for the same thing. Just wait for the moving averages to catch up a little bit, right? For that 21, for that 8. Probably we're going to form some sort of base around these levels. So if you're shorting, be aware of that 21 exponential moving average as a possible cover point. But then otherwise, just waiting for that 50 daily moving average to act as some sort of support in the market. So that's gonna be it for the QQQ, and you can see the indicators: bearish trend oscillator, bearish TTM squeeze. No reason to buy this market at all. If anything, just short the rallies if we happen to get one next week. That's gonna be it for the QQQ. Then let's take a look at, I don't think there's much to take a look at, right? We can take a look at the TNX, and the TNX is something that you can see that we basically, and this is something that we were talking, right? If we just zoom out here a little bit, you can see that the TNX was coming down. We actually came down all the way to that 200 daily moving average. And when we had that pullback to the 200 daily moving average, now we form a bottom. Now this was a tradable bottom as it acted as support, and then we have a really nice rally all the way to the highs, basically all the way to these highs right here, not to the all-time highs, but to these highs right here. And now those highs, I think, are acting as a little bit of resistance. And now what is something super important is to understand that we're starting to see some divergences here in the trend oscillator. You can see, and you can see right here that the trend oscillator is actually making a lower high, but you can see that the TNX continues to make higher highs in price. So my expectation is that we are actually going to see a little bit of a sell-in here in the TNX, probably a reversion all the way to that 21 exponential moving average. And now the question is, what is going to happen with the market and the TNX? We have seen some sort of correlation between the TNX and the SPY and the QQQ, but don't take it like if the TNX goes down, that doesn't necessarily means that the QQQ is going to be up. So just look at it as a compass, not exactly as a super high correlation indicator for the market. So that's going to be it for the TNX. And then something that I do want to take a look at, and of course, let me just, before we go into something else, let's take a look at the TLT. Bonds, they just continue to sell off. No reason to think that they're going to change. I'm starting to see a little bit of a change in the structure in the trend oscillator, but nothing substantial right here. You can see that the TTM squeeze already fired to the downside. We're probably gonna see some sort of reversion here, but I'm gonna wait. I think it's better just to wait. Let's see if TLT forms some sort of base and then offers a nice change of a structure trend and a trade. So we have just to be pretty patient here, pretty patient with the SPY, with the QQQ. There's not much to take a look at, and there's one thing that I wanna mention, and that's gonna be basically one of the only names that I'm gonna be watching for the weekly watch list, and that's gonna be the XLE. Now the reason that I'm watching the XLE is because we're starting to see some sort of basing pattern here, right? We're starting to see that the XLE is finding a little bit of support at that 200 daily moving average. And we're starting to see some consolidation in this kind of round base in the price of the XLE. Now, the XLE has been pretty choppy. So you have to take this probably with a small position size, or probably we happen to retest these lows, then probably that's going to offer a better entry point. Or if you like breakouts, perhaps a breakout above this 85 level is probably going to offer some sort of reversion back to that 21 exponential, but that's going to be kind of the only trade that I'm going to be watching. If we happen to continue to base and this 8 exponential starts to catch up with the price, and we also see this 21 exponential, then probably we're going to see something like this, and that is going to be a tradable reversal pattern trade for the XLE. So not much to see actually, guys. I think that things are really extended to the downside. So if you're watching to short, just be careful. We can have a snapback rally into resistance at any moment, but also we don't have any reversal patterns at the moment. So there's basically kind of in a hurry up and wait mode, just waiting for the patterns to form, just giving the market a little bit of time and just waiting for better conditions either to the short side or to the bullish side. Why? We just want to wait for patterns, we just want to wait for setups, and right now in the market there is not much of either. So of either for the bulls or either for the bells, things are really extended, so better just to wait a little bit. So thank you so much, guys, for watching the video. This was a short one. I don't think like starting to analyze more charts, it doesn't make much sense. We just have to wait for better signals. And also let me know in the comments if you like the hourly charts. They're gonna look a little bit different from what you were used to watching on the regular market updates, but if you give them a shot, I'm sure that you're gonna find a lot of opportunities in the hourly charts, and you're gonna be able to flow better with the market, especially if you're a swing trader. If you're a position trader, then probably you're not gonna find a lot of value in the hourly charts. But if you're a swing trader looking to hold something from somewhere around 5 to 6 days, then the hourly charts are gonna be really valuable for you. So once again, thank you so much, guys, for watching. Remember to like and subscribe, and also follow me on my Twitter account at Capital. Thank you so much, guys. See you. Bye.